Back and on to corporate conversations then. V-Mart Retail's fourth quarter revenue surged almost 17%. EBITDA was up 70% on a year-on-year basis. Meanwhile, the board has also announced a bonus issue of shares. To discuss this and a lot more, Anand Agarwal, the CFO of the company, is joining in on the show. Anand, good morning. Thank you for joining in. Now, how has sentiment been on ground? We are almost, 35 days into the first quarter of FY26, heading into another upcoming wedding season. How has sentiment looked on ground, and what are the kind of growth targets you are penciling in for FY26, be it on the revenue or the margin front?
Hi Vivek, good morning. And I think the sentiment on the ground remains positive. We are quite gung-ho on the underlying opportunity. And we keep building on, more momentum as we move forward. Footfalls have been quite positive. And I think while Eid, some part of the festivities this year shifted into March, but otherwise the wedding season is quite strong. And the expectation of a good monsoon also lingers on. So thereby we are looking at a good quarter ahead. I'm not building in any, misadventures right now, but I think at an overall level, we are still looking at, a good growth going ahead.
So Anand, X of any misadventures, what could same-store sales growth look like for FY26? And you want to break that up in first half, second half?
Difficult to break it down, Rima, but definitely looking at mid to high single-digit same-store sales growth as we have delivered in the past as well. So last quarter, in fact, was the sixth straight quarter of same-store sales growth. And looking forward also, I believe we should be able to continue with a similar kind of growth story.
Sorry, wasn't FY25 in 11% same-store sales growth?
Yeah, for the full year, it was 11%, but it also came at a slightly lower base of FY24. Okay. So on a larger base and on a much stronger network, it will be difficult to deliver a double digit, but we'll definitely try for high single or mid to high single digit.
What will drive that same-store sales growth, Anand? Would it be V-Mart? Would it be Unlimited? Or will it be a combination of both, or one leading and the other following?
I think it will be a good combination of both. Primarily what is happening is that we've been working a lot on our product, and we are trying to attract a much younger audience, much more youth, and that has been sort of working. And we've also worked a lot on our quality and on the replenishment side. So all of that is not happening only at one single brand level, it's happening at an entity level. And it's impacting the performance, and the benefits are accruing on both the brands. Apart from that, we're also doubling up on the expansion now that we have closed some of the unprofitable stores. So we are also looking at higher expansion, higher growth targets for all the old stores where we need to do some facelift or upgradation, etc. So combined impact of all of that should continue to give us better results, as we also see some amount of tailwinds coming from the rural sentiment. So if you recall, last 2-3 years had been slightly subdued as far as rural was concerned. And we are seeing better, footfalls, better conversions, and better interest coming in from all these sectors.
Okay. What's the outlook on margins? You've ended Q4, I believe, with margins of 8.7%. Now, given your expansion plans, the refurbishment, the new products that you're adding, what could margins look like in FY26? And if you could break that up in terms of retail and digital, because digital is still loss-making.
So I think we should continue to build on the margins. I think a large part of the margin should come in from the kind of same-store sales growth that we are able to get. But largely, I'm not looking at a lot of margin expansion. I'm looking more at a top-line growth with stable margins. If at all there are margins expansion, I think it will come at the back of slightly higher like-to-like sales growth. But otherwise, we would want to, as a value retailer, want to give back to the customers as much as we can to drive higher volumes and grow more on rupee margins rather than percentage margins. So that's been our philosophy, and we will continue to build on that as well.
What about store additions, Anand? You had mentioned at the end of your fourth quarter update that you're expecting to add around 60 to 65 in FY26. How would you break that up between V-Mart and Unlimited?
So roughly 20% of that should come in South India under Unlimited, and the balance should come in V-Mart. While we remain quite optimistic on expanding the Southern India, expansion slightly higher, but the constraint around finding the right locations at the right cost remains a bit challenging. But otherwise, I think at an overall level, we should still look at around 12 to 13% net area addition, which should translate to around 60 to 65 net stores for the next year.
That's similar to what you did last year. I think last year was also 62. And this year also you're guiding for about 60 to 65 new addition in terms of store. Sorry, just getting back to the point about margins. You're saying margins will be stable. But the outlook on digital, where you're still making losses, what's the company planning to do about that?
I think the digital losses have consistently been coming down by almost 50% every year for the last 2 years. And we continue to look at that side of the business more as a omni enabler rather than a cost center. So basically what is going to happen is that the LimeRoad part of the digital part of the business will continue to invest in new technologies in upgrading the customer experience at an overall level, while not really expanding so much the loss-making e-marketplace business. So as a result, we should continue to look at the losses coming down by again 50% in this current fiscal. In any case, this business is around 1% of the total business, so it's not a material number, and even the losses there are very, very immaterial now.
That's true.
So profitability still far off in this fiscal, Anand. So maybe by FY27.
So in the digital place, we are not looking at profitability in this year, but at an overall level, we have been profitable this year, and we should also be profitable next year. So I think that LimeRoad is a very, very small, insignificant, but important and critical part of the overall business.
What's your average price point of the apparel now? And how would it compare with what it was, say, last year or 2 years back? Just curious.
So average selling price for apparel is around 300 rupees. It's slightly higher in South India and slightly lower in North India. But otherwise, the pricing has remained stable. There have been a 2% reduction versus last year, but mostly due to mix variations. But otherwise, from a pricing perspective, we have not taken any price hikes or price reductions.
What about inventory days? Anand, one final question from my end. From around about 132 in September of 23, you came down to 92 in December, slightly higher at 102 in March. What do you expect to go on this trend? Where does this go?
I think on a moving average basis, we are happy with around 90 days of inventory. Currently at March end, we had slightly upstocked our inventory in preparation for the upcoming, the summer season as well as the wedding season, and also for the new stores that we plan to open. So in fact, we opened around 7 stores in the last 1 month itself. So today we stand at almost 503 stores. So we've been building up on that part as well. But otherwise, on the inventory front, we remain very comfortable. The inventory is very healthy. In fact, our inventory provisioning actually came down last year by almost 50 basis points. So that is a reflection of the health of the inventory. So we're quite happy with the inventory that we hold.
Thank you very much, Anand, for joining in, and look forward to more conversations with you as we begin this new fiscal year. That's the management guiding for mid to high single-digit same-store sales growth, lower than the 11% that they clocked in last year. Margins will remain stable. The stock is down 7.5%. Get into a break. On the other side, Dheeraj Singh, CEO of SIS, will join in to talk about the company's Q4 results.